3, 2, 1.
Assalamualaikum and hi everyone. Welcome back on the financial review program with me, Norhana Najwa binti Roslan, your favorite host. Today we are looking to know more about this living company in Asia, Maybank. We also have special guests from the top management of Maybank company in Kuala Lumpur branch. We invite them here to present more information on the company's financial performance. Without wasting time, let's introduce our guests.
Hi and Assalamualaikum. I'm Anis Maisarah binti Ramli, one of the junior accountant executive here in Maybank Berhad. Previously, I was working with Petronas Berhad as an accountant clerk. And although the company here I'm working and the previous one are totally different, but I gain a lot of new experience that enhance my skill. And for sure, I will use all of my skills that I've learned at Petronas Berhad here in Maybank and also try to improve myself to be a better accountant here in Maybank Berhad. And thank you for having me today.
Hi everyone, my name is Nurul Ain Atira binti Nazri. I currently working as a junior accounting executive in Maybank Berhad. Previously, I worked at Tenaga Nasional Berhad as an accounting for almost 3 years. Even though my previous company is slightly different from the current way, the knowledge I have before helped me to improve to enhance my team so that I can contribute more to this company. Thank you for having me.
Thank you all for the brief introduction. Before we go further into Maybank's financial performance, let us know more about Maybank. Maybank was established in 1960 and today, Maybank is the largest service group in Malaysia with an established presence in the Asia region. Moreover, Maybank is now the largest corporation on the Malaysian Stock Exchange in terms of market capitalization. You know that among Malaysia's publicly traded corporations, Maybank is ranked first and among the top 500 companies in the Forbes Global 2000 ranking of the world's leading companies. Until now, Maybank's whole admission to humanist financial services across Asia by making financial service simple, intuitive, and accessible. Maybank also built trusted partnership for a sustainable future together and treat everyone with respect, dignity, fairness, and integrity.
Thank you Norhana Najwa for the explanation on the background of Maybank Berhad. Let us now proceed to the management approach. Factors considering to having a segmental reporting. The first one is the nature of business activity. Nature of business activity is defined as an action carried out by an entity with the primary goal of profit maximization. And as we know, for Maybank Berhad, their nature of the business are providing products and services based on financial and also one of the largest Malaysian stock exchange in Bursa Malaysia. The second factor is the existing of the manager that is responsible for all of the activities. The manager of the segmental reporting is responsible to oversee all of the activities and communicate directly with the chief of decision maker. The last factor is the information that is presented to the board of directors. The chief of decision making has to refer the board of directors report since they include a credible information about the whole entity's performance.
The types of segment in Maybank Berhad are business segment and geographical segment. For the business segment, it is a unit of entity that is engaged in providing goods or service. The business segment operated by Maybank are commercial banking business, Islamic banking business, finance company business, investment business, insurance business, asset management business, IT infrastructure, human resources development, and not to forget community relations. All of the segments offer different types of services and will be operated under several divisions. Moving on geographical segments is also an item of an entity engaged in providing product and service, but only within a particular economic environment. Maybank has expanded its branch in Malaysia, Singapore, and other international financial centers such as Indonesia, China, Philippines, Vietnam, Myanmar, New York, Hong Kong, and also London. Next, Chief Operating Decision Maker and its responsibility based on MFS. Each Chief Operating Division Maker is responsible to make decisions about resources to be allocated to the segment and assess its performance. The CODM of Maybank is Tan Sri Datuk Sri Zamzam Zairani Muhammad Isa, who is appointed as non-independent, non-executive director and also the chairman of Maybank. He is followed by this fourth director to manage the business and affairs of the bank, which also has responsibility to critically review and approve the overall strategy, business organization and significant policies of the bank. We have Datuk Abdul Farid alias Datuk R. Karunakaran, Chair King Chat, Edwin Kerungan, and last Dr. Hasnita Datuk Hashim.
Next, we are going to see the process of identifying the reportable segment and non-reportable segment. According to MFRS 8 operating segment requirements, an entity shall report its information with regards if they pass the quantitative threshold test, that is the 10% threshold test and the 75% test. These two threshold tests is being done in order to identify or to qualify the operating segments. Either it is a reportable segment or it is a non-reportable segment. So for the first test, that is the 10% threshold test, we have three types of basis. The first one would be the revenue basis, the second one would be the profit or loss basis, and the third one would be the asset basis. As for Maybank Berhad, we are using the revenue basis as our 10% threshold test. This test is carried on and the operating segment has to be 10% or more in order to be recognized as the reportable segment. If the operating segment does not meet the 10% threshold test, it will not be qualified as a separate segment in the financial statement, but it has to be combined together and put as all other segment categories. After the identification of the reportable segment and the non-reportable segment, next the company has to do the 75% test, which includes the external revenue of the reportable segment has to be 75% or more than the external revenue of the entity. This is the table that shows the 10% of threshold tests. So there are 3 reportable segment and 3 non-reportable segment here. So for the reportable segment, number 1, we have the group of community financial. For number 2, we have the group of corporate banking and global. And for number 3, we have the group of takaful and insurance. With the number of percentage that shows here with the 58.43%, 34.50% and also 11.43% respectively according to the groups. And as for the other 3 non-reportable segments, that is the group of asset management, the group of investment and also the office has been combined together and renamed as all others in the financial statements. Since Maybank Berhad requires 4 reportable segments and at least 1 non-reportable segment, we have to add on another 1 operating segment that is been added here. That is the group of IT infrastructure. As shown in the table, the group of IT infrastructure has passed the 10% threshold test with the percentage of 11.58%. Therefore, there are 4 reportable segments and 3 non-reportable segments for Maybank Berhad. Immediately after the 10% threshold test, we have to do the 75% test. For Maybank Berhad, they have passed the 75% test with a percentage of 99.94% for all the external revenue reports. So this is the new segmental report for Maybank Berhad that consists of 4 reportable segments and 3 non-reportable segments. For the non-reportable segments, if Maybank Berhad thinks that it is significant for them to show the information about the non-reportable segments, they can do so by adding them to the 75% threshold test. Since Maybank Berhad has passed with 99.94%, there is no problem for them to just add the non-reportable segment to be reportable segment.
Thank you, Ms. Anis Maisara. Based on her statement, we can see that segment reporting is important to help financial statement users get better understanding about company's performance, better assess company's profits for future cash flow, and make more informed judgment about company as a whole. Now, let's take a look on advantage of segment reporting. Firstly, financial statement users can get better understanding on company's performance. It allows stakeholders to get better sense of the changes that might affect overall figures of the company. It also helps the investors to understand the business and also cash flow. Second, transparency is displayed in the report. In segmental report, it's revealed which areas are profitable and which are drains on the bottom line. Furthermore, managers will not be able to hide any unprofitable ventures. Last but not least, for the advantage of segment reporting, it can help potential investors in better investment decisions. It can assist the investors in evaluating, analyzing and understand the company's financial statement that can help in decision making based on the company's performance. Next, we will look at disadvantages of segment reporting. Segment reporting lends itself to data manipulation if the information is reported in the true management eye style. This gives company leaders more discretion in how it determines how segments are constructed and what metrics are reported. Managers may group together business with different business models. It can also cherry-pick metrics to send the desired message to stakeholders. Loss in an internet division, for example, could be grouped in with an unrelated profitable business unit to paint a better picture of performance. Last but not least, presenting the results of segment operation to external users could lead to competitive damage. Confidential information will be revealed to competitors about profitable products, plans for new product or entries into new markets, apparent weakness which might induce competitors to increase their own efforts to take advantage of the weakness, and the existence of advantages not otherwise indicated.
Now, I will continue on part B of the preparation of the interim report. Before I go in depth, I would like to give some explanation on the basis of preparation of the interim report. First, this report is prepared on the historical cost basis, except for the certain financial assets and liabilities they are stated in the fair value. The report has been prepared in accordance with the requirement of FAR570. Next, significant accounting policies and method of computation applied are also consistent with the most recent audited annual financial statement for the year ended 31st December 2021, except for the adoption of the amendment to the FAR4, 7, 9, 60 and 39 regarding to the interest rate benchmark and amendment to the FARS system. FARS 134 interim financial reporting adopt a discrete method as a basis of preparation of the interim report. According to the discrete method, each interim report should be considered as a separate accounting period for the annual cycle. By using this method, interim reports are meant to predict and describe to the financial position and financial performance for the discrete method, which may be segment of the annual period. In general, FARS 134 interim report describe an approach that revenue and expenses item can be measured and recognized in the same way that annual financial statements are prepared as per the discrete method. However, for a certain annual revenue and expenditure item, it is best to consider the estimated income and expenses for the whole year in order to determine the appropriate amount to be recognized in the interim period. Next is accounting policy. There are a lot of accounting policy are used in preparation of interim report, and I will highlight two of it. The first one will be MFRS 138, which is for intangible asset. The table shows the summary of policies applied to Maybank's intangible asset. It will be measured initially at its cost and subsequently at its cost, less any accumulated amortization and any losses. Intangible asset with indefinite useful life will not be amortized, but it will be tested for impairment and rebuilt annually, while intangible asset with finite useful life will be amortized using its useful life and tested when there is an indication of impairment. Second accounting policy is MFRS 116, which is property, plant and equipment. It will also be measured initially at cost and subsequently at its cost, less accumulated depreciation and accumulated impairment losses. The property, plant and equipment will be depreciated on the straight-line basis over its useful life at the annual rates shown in the table, except for the freehold land because it has unlimited use of life and therefore is not depreciated.
From the report, we can see that there are 5 types of interim reports prepared by Maybank, which are unaudited condensed income statement, unaudited condensed statement of comprehensive income, unaudited condensed statement of financial position, unaudited consolidated statement of changes in equity, and lastly, unaudited condensed statement of cash flows. The content that should be present in the interim report is including all of each heading and subtotal that was included in its most recent annual financial statement. The selected explanatory notes are required by the MFRS 134 interim financial reporting that focus on the significant changes in financial position since last reporting date. The basic and diluted earnings per share on the face of the statement if the entity presents the item of profit or loss in a spread statement. The report should also be prepared on consolidated basis if the most recent annual financial statement was a consolidated statement.
Maybank's accounting periods ends on 31st December annually. Now, we are referring to the interim report on the fourth quarter, which is from 1st October 2021 to 31st December 2021. For the unaudited statement of income statement and comprehensive income, the reporting for the 3 months for current interim report from 1st October 2021 until 31st December 2021, and 12 months for cumulative year-to-date from 1st January 2021 until 31st December 2021. 3 months for comparative current interim from 1st October 2020 until 31st December 2020, and 12 months for comparative year-to-date from 1st January 2020 until 31st December 2020. On the other hand, for the unaudited statement of financial position, reporting period is for 3 months for current interim from 1st October 2021 until 31st December 2021, and 12 months for comparative period end of year from 1st January 2020 until 31st December 2020. Lastly, for the statement of changes in equity and statement of cash flow, the reporting period is 12 months for cumulative year-to-date from 1st January 2021 until 31st December 2021, and also 12 months for comparative period year-to-date from 1st January 2020 until 31st December 2020. Before we end our section, I would like to show some effect of adjustment. First adjustment is related to MFRS 138, which is intangible asset. On 1st On 1st October 2021, a software costing 200,000 that was purchased on 1st January 2016 with the expected useful life of 10 years was disposed. Its carrying value on the date was 100,000. Then, on 14 October 2021, a new software was acquired at the cost of 500,000, which is expected to be used for 10 years. After the adjustment, the closing balance of its cost is 10,744,905,000, but the accumulated amortization is 3,525,965,500. The carrying value of intangible asset is 5,574,443,500 after deducting the accumulated amortization and accumulated of impairment loss of 1,644,496,000. The second adjustment is related to MFRS 116, Property, Plant and Equipment. On 31st December 2021, a building with a fair value of 800 was transferred from investment property to owner occupied. There was a change in use of the building, so the amount of the PPE will increase by 800, while the investment property will decrease by 800. Before the adjustment, the amount of PPE, investment property and intangible asset disclosed in the statement of financial position for the quarter ended 31st December 2021 was 2,129,989,975,048,000 and 6,683,461,000 respectively. After taking into consideration of both adjustments, the amount is disclosed is adjusted to 2,130,789,974,248,000 and 5,574,443,500.